Morning. All right. Markets are trying to take off here today. Some are looking better than others. As you can see, one thing to do is turn on the TV, turn on your platform every day, and you see whether things going up or down or they just flat. Well, of course, that's a starting point where most of us start out just to see is it up or down, green or red. And then we look at the chart and say, okay, if you're up 100 points, just whatever it is, and where are you in relation to what's to the left? Did you clear it? Or you're at all-time highs, or you're at 52-week highs? Even if you are at 52-week highs, is the next area of resistance smack in your face? So as we look at the markets this morning, you see the S&Ps here. Yeah, they're up a few points, not a big deal, but they're testing that prior congestion where they fell from. That topping tail on the daily chart. And the way that they came up, you can see, that they dropped and ripped right back to the upside, and now they're at resistance. So one way of interpreting this is to say, well, the sellers were there before. Why shouldn't they be there again? Well, they kind of got it in their eye on the last drop pretty quick if they shorted that. And, the thought of, okay, that is the high. Well, that's now in question. So should I sell that again? Well, maybe. Just give it a shot. The stop is not that far away. And if it works out, maybe I've got a home run back down to here. On the other hand, a topping tail versus a bottoming tail within an uptrend, right? The weight of the respect, so to speak, has to go with the trend. And bears had a hell of a shot here with this topping tail, which was also a breakout failure, right? See the highs there are the same, and it came back in again, and they couldn't even take it down to this level. Remember, we were talking on this day, well, can it stay in the upper half of the wide range bar? Same like here, but here, this was a breakout, so it becomes more critical to stay in the upper half. Well, and by the way, just, it's okay for the tails to go down below the 50%, but the bodies have to stay in the upper half. That's the rule. Who made the rule? Me. Works. I get to make the rules. Anyway, the bodies stayed above the high of that wide range bar. That's bullish. So when we look at charts, right, you can just imagine a line on close. Went up, went down a little, went up, went sideways, went up, went sideways. In other words, we have a base here. Now, when we add candlesticks to the mix, it starts to make things a little fuzzy because now we see rejection of highs and rejection of lows, right? But we have this other view of what does the close look like, and we're trying to, create our bias of the weight of the evidence, right? As we call it. And what is this arrow here? Let's just get rid of this for now. So the weekly chart is ho-hum, not much going on there. Just a stall in momentum, small candle body, right? But that's that little consolidation there. And so that kind of opens up the door. Well, I don't know what today's going to look like. None of us do, right? If it looks like this at the end of the day, of course, as we always do, we say, well, if it breaks below that low, right, that starts a pullback. And so one of the things I'm going to talk about today in this presentation I'm going to do at 12 o'clock is demystify the concept of momentum. I don't know if any of you have been to this event that's been going on all week. And there's a lot of talk of momentum and how to measure it with all of these indicators and oscillators and histograms and algorithms. I'm going to explain it so, a 12-year-old could understand it. You can be there at 12 o'clock if you want to hear about it. So anyway, so now we go back to our factory work. Right? I love factory work with technical analysis because it kind of keeps my 2 cents out of it, meaning what's going on. Well, what if this, what if that? And I have an email issue right now, Alex. Yes. I actually changed where our domain is located and the emails yesterday afternoon. And I'm going to contact them in a few minutes here because there's probably happening something within the transition. I did that yesterday later in the day. So yeah, something got out of whack. Yes, absolutely. All right, so this consolidation here, so far, pretty much in the upper half of the wide range bar poking up into resistance. The longer it can go sideways here, right? It's been doing it now for several hours. The more it's saying, hey, you sellers up here, bring it on, I'll take it. Well, you know, obviously if it breaks down below this congestion here in the wide range bar, that becomes a bit of a problem because it opens up the door to going back down to the low of the bottoming tail bar. So I don't know right now. Either way, it's not going to violate the uptrend on the weekly chart or the daily chart. But for intraday, we were in the trading range, right? Up at the top of the range, and well, you know, we got down the bottom of the range. And so we put things in perspective of what's going on rather than say, oh, the market's been going up since, you know, that October low, and now it's extended. And my ultimate oscillator says it's ready to reverse down again, blah, blah, blah. Hey, if this turns into an M top, yeah, we're going to find some shorts. We're going to find some bear credit spreads and so on and so forth. Okay. So we'll see. 33.05 looks safe. Well, 33.05 to the downside. Yeah, I don't know about that, trader. You know, 33.05. I don't know about that. If things get out of hand, you know what I mean by that, with this being violated, the bottom here could hold, right? I don't know what would be the motivation to get things that ugly, but that is where buyers stepped up, you know, down here. And so I know we're talking about a credit spread. Can it hold above there today? I don't know, place the trade, find out. We'll find out together, right? But at least it's a good reference point. You know, if there's premium down below 3,300, you know, or let's assume that this breaks. Well, let it come down wherever and let's see what it does. Let's watch the tick. If it comes down here and we get an NYSE tick at plus 1,000 and it rips back up again, well, then I think 33.05 is going to be very safe. So, you know, as we gather more information, our confidence level goes up, you know, as opposed to, look, if it breaks out above the highs and there's premium at 33.05, it should be real safe, right? Because that now, you know, bulls have taken control and this has taken out the highs. So we'll see what it looks like. Right? All right, let's continue. It's getting too late here. Qs, the stronger, obviously. You can see they've already broken above the prior high resistance of the topping tail. So maybe this looks like it potentially can go parabolic straight up. And we know what'll happen from there. It'll be a big correction. And what'll happen after that big correction? We're going to buy it, right? Because this is in an uptrend. The monthly's in an uptrend. And we'll see how far down this comes. YM, the Dow Mini is weaker. You can see it's not even up at the prior resistance. And I don't need any squiggly lines to tell you what's strong and what's weak. And I just look at the chart. Right? Is this in the same place, in the same reference point as the other market? No, it's relative weakness. Can it get there? Yeah. All right. So sometimes the one that's weaker is the one that we want to be in because it plays catch up. On the other hand, this doesn't have very far to get to there. So you got to be nimble or find something else. Russell, minor support. We use it as a reference point because everybody else does. The real support is over here. These overlapping opens and closes, these tails. Where did it bottom out yesterday? Right in this area. Buyers stepped up, And now let's see if it can get going, right? So weaker, but maybe brings up the rear as it has. Oil going down, going down here. Looks like it's going back down. You got to, McGraw, just an idea. Do you ever look at crude oil? Do they have options that expire on the same day? Because we can do it in the SPX. We can do it in anything. No, they don't have that. I mean, anything that has options that are expiring today, one of these, these contracts that might have premium, we can do the same thing, apply the same strategy to whatever. It doesn't matter. But, yeah, do it with Google. Bonds, I think that's a buy now. It spent enough time here. It's showing some push. Yeah, I know it's at this resistance here. You want to wait till next week. That's all well and good. But I like this pattern, which means interest rates are going down. So TBT, you can buy TLT, which is the ETF. Right? You can see a similar pattern. It gaps because it's based on what the futures are doing. TBT, that's going down. And eventually, now, what's been going on here, and we haven't looked at this chart in a while, but you remember last year with all the worries as this line was declining about an inverted yield curve and recession and blah, 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 right? Came right down to the cliff point and it held. And it's put a lot of room about this. Yes, Robert, they're inverse. So TLT goes up with bond prices and TBT goes down. That's interest rates or short bonds. So if TBT is going to go down and go down significantly is going to be the question, that is going to bring this yield curve line, going to keep bringing it back down here. It'll take a long time, so no worries at this point in time. And, as long as the Fed doesn't raise interest rates while this is coming down, we really don't have much to worry about there, but that's my job. I keep an eye on all of that and let you guys know what's going on. Gold, kind of messy. You know me, I was talking, I want to see it come down here. It hasn't done that. I'm not sure that this consolidation is over, but nonetheless, I'm still of the opinion that this is going to go higher. It's just uncertain at the moment, and uncertainty is represented by small candle bodies, large tails, overlapping bars, and so on. Silver, same story, just a sloppy mess. And transports, bullish sign, right? Broke out, was great. And now here's a little something to consider. It's like, here, breakout failure comes back down into that area. That's not a positive. Yesterday, it had a good day. Well, obviously, that candle, the weekly, was a big red candle. And we go back to our factory work. Wide range bar breakout. Candle body's got to stay in the upper half, ideally the upper third. Tails going down are okay. We're breathing again on the weekly chart. And so as we go into next week, assuming it looks like this, we're going to want to be long transports next week. All right, so we'll see what today looks like. But remember, this has got room to play catch up. So assuming we have a bottoming tail bar at the end of today, next week, we want to be long some transportation stocks because now we've had this correction bar. So it shouldn't go back down there again. So we've got a line in the sand. We've got an upside target, which ideally should overcome that. Equity markets look okay. And, our market internals, remember, we're looking, look at this breadth. You better be in the right things because something isn't moving here, right? It was even negative this day. And the wrong way option traders, well, they're getting it right. Maybe this is really the story for the history books that this is up here. But, the analysis has always been for us to get bearish or cautious on longs, that these have to agree. And while they agreed here, We got a sideways correction, not a downside. We got a little bit of downside. Anyway, time corrections versus price corrections are bullish. And is this market bullish? Do people think this thing's going to the moon? Absolutely. I don't like this, but if the transports can kick it in and the Russell's going to kick it in, this is going to go back up. And then at some point, I don't know if it's next week, I've mentioned over the course of the week, watch out the beginning of February with that ISM number. If it comes out negatively, that's going to be the excuse to sell. So I think that's the plan for today and going into next week. All yours, Dan.
Yeah, good morning. And I thought the coronavirus would be more of a reason to sell, but they don't even care.
Since I've already gotten it and lived through it, Dan, we're all good.
Say again?
Since I've already gotten, according to Pat, this viral pneumonia when I came back from Bulgaria and coughed my brains out for 2 weeks and I survived, that's going to be old history. I lived.
Well, but they also, two things. We don't know what you had, number one. Number two, 28 people have died. So,
How many people died?
I think I saw 28. 31 now, see? So,
Well, you know why? You don't want to know why they died? Their wife they didn't have my wife's chicken soup.
Right. Well, you got a little side business there. All right, let's take a look. And Nigerian was not Nigerian. What's his name? The Bond guy was on Fox Business talking, or CNBC, whatever. Whatever his name is. Yeah, the Bond guy's partner, Rick Gross partner, whatever, it doesn't matter. But very intelligent guy. He was just very clearly explaining that the market is so darn bullish because of liquidity, not because of fundamentals. He says, it's correct, thank you, Arian, right? He's just very emphatic saying we're the liquidity train. The Fed's been dumping ever since the low in the spiders. Here, I'll show you exactly what day it was. Greg, we were in an MT live, and all of a sudden it's like, whoa, what is happening? I think it was one of these 2 days, whatever Wednesday was. And that's when they said, all right, I'm gonna add more liquidity, and just like the old days, and it's a liquidity rally here. But you and I and our subscribers don't care the reasons, because we're playing. Well, he was right. Robert's being sarcastic, right? The Fed is saying it's not QE, but yeah, all the smart people say, of course it is. Exactly, it's QE4. And then, all this talk about the overnight LIBOR rates, that they were dumping so much liquidity and equal to the amount of liquidity that they were doing in the banking crisis. So yeah, there's some weird things going on in the back end. And again, it's all more liquidity based is what the government's been doing. All right, let's continue. All our opens are fine. Yeah, Amazon, we have a put spread that's going to expire today in the weekly. We have Netflix for next week. We have Lyft for next week. And we have Tilray that expires today. And I think today's going to be a good day for selling zero DTEs. A number of these FANGs, anything else that sets up, because a lot of things are gapping, well, that's not a good example, but look at Facebook. So a lot of things here I'm noticing are gapping above nice 15-minute resistance. So even though I wouldn't touch this daily, and I'm not saying this is a great candidate, but this is kind of the pattern. I'm seeing a lot of this gapping over resistance. If it can take out a 10, 15-minute high, then let's sell some puts, zero DTEs. All right, CYOU, big gap, That's weird as junk. Oh, now Microsoft's sending me friggin' pop-up advertisings. How likely are you to recommend Windows 10 to a friend? Would you get off my computer? Wow, that's annoying. Go away, go away. IIPR, this, we had a put spread in this, you know, way the heck down here, the 70s, 60s. But I did not like the action yesterday. You know, this tail is real. It had a big rally. And so I killed it into the close. I said, take, no, I know, I'm saying take the ads off. So that was great management. There's nothing to do with it now, no pattern. That's the marijuana REIT ETF. Snap, I just saw this gapping up. There's no pattern, but wow, we sure missed a beautiful breakout here. Look at that. Here's your no-brainer trade right there. Or you could have got in there and then added. Wow. You're garbage. You're gone. Boeing, remember I was saying yesterday, a day trade, this kind of reverse heading shoulders. It just had bullish action yesterday. You know, but there's still no pattern to go out to next week, and there was no premium to sell put spreads yesterday that expired today, so I didn't do anything with it. So beyond here's an example. Look, it's gapping up. Now I got a ton of support here. Daily is still a mess, but this is a put spread candidate, the 0 DTE. This looks like a pump and dumper, but you know, if you don't mind these little stocks, as long as you get a liquid bullish intraday, then these actually provide good day trade setups. But I got enough good stuff to worry about. Eric, ADR gapping down. Wow, that's getting whacked. Look at that. $8 here to $9. That trades in like penny increments. That's getting whacked. AVT earnings, no pattern. AppGo, it's not earnings, but it signed a contract with Apple, supply some stuff. Big gap, but no pattern. CVTI 1320, nice gap, but no pattern. APD, I can't tell where you're gapping. Tesla was up 6 and change. I saw a guy on CNBC downgrading it to, I forget, I think he said target 250. In the CNBC interviewer said, well, you know, it's at 572 right now. And he's like, yeah, but that's amazing. You either love or hate Tesla. It's just one of those stocks. Do you remember when people thought it was going to $20? Well, they're surely getting run over. Big gap here, EHTH, no pattern. I'm not going to even worry about you. ASB, sloppy pattern, but put spread candidate. SIVB, I like this one. I was hoping it didn't gap up that big. I posted it as a long over yesterday's high, but let's see where it opens. Deck got an upgrade. Wow, look at that to all-time highs. Well, yeah, 183. Gap's too big, no pattern. I don't have a single tier 1 yet, except maybe that SIVB. Gapping down under 38. All right, so this is a bearish one. This is a bank reported earnings. The monthly's bullish. I don't know. That's not tier 1. HRC 108.50. It's a bearish gap. APT we looked at. SYF gapping down, a bearish gap under all of this support. It might set up as a day trade short. We'll come back to it. NEP, too extended. Knee, there you go. That's a climactic sell setup, topping tail, gapping down. I think it was earnings, so this would be a call spread candidate. Let me put that in a window. Team. Yeah, I saw in the video up, I guess, with some of the other semis being strong. 144 team, gap's too big. Yeah, in the video, yep, saw it. I saw MU. MU was up, AMD, SMHs. Yeah, look at SMHs. We're still in this in our ETF trader. It's very nice. SWKS gapping greater than 50% into that bar. ISRG, bearish gap, call spread candidate if you can get something for today. Intel. Yeah, on MT Live on Wednesday, I told somebody asked about this, and I said the weekly and monthly sure look higher. So that was this bar. This was Wednesday. It looked great. Nothing to do with it now for me. EFT, there's a bearish gap, 15-minute low, breakout failure. That's a call spread candidate also. DFS, big old gap, too big. Hewlett Packard, Alex was watching that last few days, looks higher. ICE, I posted into the close yesterday, bull call debit spread over yesterday's high. AAN, we'll see if it can break out. That's a, just a bottoming pattern. LB had a nice gap over a red bar yesterday. Let's see what it can do. Greg mentioned this one, UFPI yesterday. Sale. All right, sale hit. I gave that over yesterday's high. This would be a great 1, 2, 3 if it closes like this. PLT. That was a great buy